Hello, everyone. Welcome. Okay, so today we're going to do something different. We're going to go over some of the stocks that I have covered in the past in terms of stock pitch. Um, and so, yeah, before I begin, I want to do some housekeeping things. So I just want to start off the stream by thanking the previous guests that were on my previous stream. So shout out to Wang, Leonard, G, Pellet Stove, Gary Minion, Comma, and Howie Sit. Those are the people who contributed in the chat. Of course, there were more viewers than that who didn't say anything. So if you guys want to get a shout out to make my job very difficult in the future, you guys can definitely type in chat, and I will give you guys a shout out in the future. Okay, we have a Korean viewer. I have no clue how to say your name. Let me let me see. So Jin Ha. Hopefully I pronounced that correctly. My apologies if I butchered it. Um, welcome. Thanks for joining us, Sojin Ha. Okay. Yeah, so I'm gonna first start off by introducing my channel a little bit, my Substack for condensed compounding. I have in 2024, my return for my portfolio was 42%. And in here, I basically have a directory of all the stock pitches, all the content that I've ever made on my Substack in one easy place to look at. And so you have my free content, and then we have my paid content that I guess, excuse me, that you guys can look at. Also have some links for my YouTube and previous videos that I've done. I have one podcast on SK Japan. Wow, that's correct. Great. Glad I could pronounce that correctly. I guess my my very limited K-drama experience of watching K-dramas or Korean movies pays off a little bit. um, yeah. Um, yeah, let's start off with one of my most popular stock pitches, which is round one. Let's see. Do we have a free round one post? We do. So yeah, this round one punch was actually featured by Emerging Value. He was a person that helped recommend my channel to his audience because he saw that I was starting out. And so this stock pitch is originally posted on Emerging Values as a kind of cross post between both Substacks. So if you guys want, you guys can have a read of round one over here. So first thing I'm gonna do is go over the earnings. Today is just a review of earnings of all the companies I've ever covered. So first I'm gonna go to round one, investor relations, start off with that. Welcome, we have another viewer that just joined us. Welcome. So we already have the fiscal year. So let's see if we have the fiscal year um, investor presentation here. Unless this is going through that. May 9th. Okay, so this should be the annual one. Okay, let's see here. So total sales has increased. Largest increase coming from amusement, karaoke, and food. Well, sales increased by 11%. Cost of sales increased by, well, little under 11. Little under 11%. But then SG&A expenses went up by 20%, quite high. Operating profit still remained at around the same level, in line with sales. Japan, one store open. In the USA, 8 stores open and 1 was closed. In China, 1 store is closed. Operating months, Japan increased by 3, the USA increased by 47. So their plan was to open 165 stores, but they were only able to open 160. Store operating months is off by 20. Now these are just key performance metrics. Essentially, like if you were to let's say add a store in the middle of the year, right? That would add 6 stores annually, or for that year, right? So in fiscal year 2025, if you open one in the middle of the term, then you would only add 6 months. But then next period, you would add additional 6 months because you have that store open for the entirety of those 12 months. Also applies to closed stores. So if you close a store, then it'll no longer generate any operating months, right? Because it's closed. But if it operated until the half year point, then it would have operated for 6 months before getting closed. So people who want to do the very granular calculation will take value in the operating months, but I personally do not myself. I look at the store count. I think it's better to be roughly accurate than accurately wrong. Is how I approach investing. What's nice is that sales has actually increased even with five less stores. Sales has increased more than was projected. Operating profit has increased more than sales. So in okay, so existing stores are basically same stores, I believe is what it means. And then total stores includes same stores from previous periods and new stores. Okay, so I guess they have definitions. Usually the same store definition has been in operation for 12 months. So when you have stores that were opened in, let's say, Q4 or Q3 or Q2 of the previous fiscal year, then they won't be in the existing stores, until later, right? So we can see here in Q2, there's 99 existing. Yeah, so it seems like they are adding stores, but then it's much. Second half, they closed 2 stores though. So, that's weird. So for this to happen, for them to close, oh sorry, number of Saturday and Sunday holidays, not plus or minus stores. Number of Saturday and Sunday holidays. Okay, it's only this. And then the USA, they were able to add quite a few stores. So they total stores from beginning period to end of period, they added 6. Okay, so next year their plan is to open 16 stores, 10 of which is coming from the USA, 1 from China, 3 are delicious. So round 1 has a concept called round 1 delicious, which is their Japanese offering concept of high-end Japanese cuisine. Of course, there are, how do I call it? So they just be renowned and high-end Japanese chefs, I guess, because some of the Japanese chefs do know Chinese cuisine, so that will be offered there too. But what do you have offered in the round 1 delicious? So it's like you have one big store facility, and within there's like, I want to say 5 or 6 restaurants. So what they'll definitely have is they'll have edomae sushi, which is literally a piece of nigiri on top of rice. You'll have a yakitori, which is skewers. Meat skewers can be chicken, can be beef. Um, you'll have Chinese cuisine. You'll have some fusion cuisine. You'll have, I believe, what else do they have? Yakitori, domai sushi, Japanese cuisine, Chinese cuisine. Yeah, there's other ones. It's very interesting. Um, my TLDR emphasis on delicious is that I think it's much more difficult for them to expand round one delicious in the US that they kind of say. Because number one, they're an amusement company. They've never done restaurants before. So this is a new area. Number two, usually for high-end restaurants, you don't see them open. It's difficult to open multiple locations, right? Some of the creators of these high-end restaurants do have the grind and the gusto and energy to do so, but typically you see one restaurant, right? And the reason why is because if the head chef is at one restaurant and they're the founder, it's hard for them to manage two restaurants at the same time, right? For that to occur, either they have a child, their son or daughter, who also has the same passion, goes to the second restaurant, second location, right? Or they're able to hire sous chefs and train sous chefs to a level where they are able to contribute in that manner. But yeah, I wrote in my I wrote in my stock pitch why I don't really see this as a growth driver, but it could be one. If it hits, it hits. If it doesn't, like, I think it's difficult. I think it's difficult in being able to take 2 years to train up a high level chef. And let's say if I were them, if I was a restaurant owner and I had like a 3 Michelin or really high rated Tabalog restaurant, I would have to send some of my best people overseas, right? And that would take off from my local talent pool, right? For at least for the first few locations, right? Because I want the first few locations to do very well, right? And plus, if I'm working with an international firm like Round One, I need to send my best people, right? So you might be not, even though they say, hey, we're training someone for 2 years to get them to the point where they can go overseas. I think in reality, what's going to happen is that you're going to send some of your best people who have been in the restaurant for 3-4 years, right? Maybe the people who are trained for 2 years won't be the head chef of that restaurant. That may be the sous chef. They might be like just a bench warmer, pretty much. Yeah. So that's my commentary on Delicious, Round One Delicious. So this figure includes HD figures. Not sure what that means by that. Interesting that they mentioned they're gonna do 10. Okay, operating profit breakdown. So they believe operating profit will decline, mainly due to what increases is operating sales from existing stores, from same stores, increase in total operating months, decreases from initial investment in new stores. Reason price. Oh, okay. So tariff. They're actually taking in tariff impacts into their operating profit, which is a real cost, right? Because the unique thing about Round One is that they what differentiates them from Bolero and Dave and Buster's and anyone else who's trying to do crane games is that they source their prizes from Japan as well, in addition to locally, right? So, what makes Round One unique is that it really caters to the Asian demographic, um, and people who enjoy anime or weeb culture or Japanese culture, right? So, if they were to import like a Sanrio Hello Kitty plushie, right, or a plushie in relation to a famous IP, let's say Pokemon, right, it will be from Japan, right? And so this would incur tariffs. So that's a risk factor. Personal expenses, increase in personal expenses, that's normal. Exchange rate, okay. Exchange rate. So the USD has been weakening, right? So if USD were to strengthen instead, then, but there's an end gap. There's an impact there. And then they're gonna adopt IFRS. Okay, so let's see how that impacts. The increase is due to a decrease in cost of sales, an increase in finance costs due to the IFRS adoption. Refer to page 32. Okay, let's quickly look at it since we're there already. Okay, so the main effect of IFRS adoption on the balance sheet as of the date of transition to IFRS from JGAAP on April 1st, 2023 are as follows. So non-current assets, approximately minus 9 billion. The decrease due to retrospective treatment of change in useful lives. The effect of the change in impairment loss assessment flow. So I wonder how that affects the depreciation schedule on things like crane game machines, right? For long-term assets. ROU assets, right of use. So the effect of IFRS adoption increased by 16 million yen. So let's see. Off balance sheet lease transaction. Okay, so instead of having rent on the P&L, in which IFRS, JGAAP doesn't recognize on the balance sheet because you just do that. Instead, they have a right of use asset and lease liability. Okay, 64, 64. Okay, that makes sense. On the balance sheet, and then you have, depreciation and interest. Okay, yeah. Due to FRS 16 adoption, operating leases will be on balance sheet. Assets and liabilities will increase significantly. Rent expenses previously incurred under JGAAP are recorded as depreciation lease under IFRS. Okay. Deferred tax assets. Reclassification of valuation allowance. Adjustment of tax effect due to IFRS. We're on 9. Oh, we're in 8. Okay. That was 8. Number 2, let's see. After July, amusement prizes expenses will be impacted by a tariff of approximately 40%. Holy crap. If an 80% tariff is applied, the amusement prize cost will increase by approximately 3.52 billion yen. Holy crap. So if that were to happen, they would dig in another, like this would be multiplied by 2. In addition, 80% of prizes are manufactured in China and the remaining 20% are made in Vietnam. Ooh, okay. So let's think about this, right? Like if you're getting taxed 80% of prizes manufactured in China, then potentially production has to move to Vietnam, right? Like you have to consider production in other places, right? Um, hmm. Yeah, I don't know who are the big countries who are producing this thing. I know that China is definitely number one in terms of manufacturing toys and that kind of stuff. Um, hmm. Yeah, 40% tariffs. I don't know what your guys' stance is, but it feels like it should go down, but it might not. Yeah. I think there's probably more upside potential in this operating profit number due to this than, yeah. Okay, so in 2026, they plan for FX to drop to 140. So the yen will strengthen. What is it currently? USD to JPY right now? 145. Interesting. Basis for formulation of IFRS. Wait, how come fiscal year 2026 plan is 11? Over here it is. Why is it higher? Oh, just on Japan revenue by itself. Hold on. Consolidated in Japan. So you're saying US is not gonna offer? That's unlikely. Oh, this is only the US. Oops. Okay, not consolidated. So this was only the US. I missed that part. So this 11 point, this makes sense now. This like, 11.72, 14.68, this is only the US. Okay, that makes a lot of sense. And then Japan, this is yeah. So it's projected to increase, of course, you're selling within the country, so there's no tariffs between China and Japan right now, currently. No, decrease in personnel expense, decrease in price, oh, same, even price expense. Interesting. Operating profit of 18 billion. Slight boost from IFRS. Okay. So in Japan, we have increased the prices by approximately 4% overall since March 2025. The effects are reflected in the plan. A price increase of approximately 3%, except amusement, is under consideration starting from the second quarter. Final decision will be made on future performance. It's the passage of 3 years since the increase in crane game machines associated with a refurbishment to Giga Crane Game Stadium. Decrease in amusement lease appreciation. Yep, that makes sense. And that's something I touched upon in my stock pitch as well, is that because they did this Giga Crane Game Stadium conversions where they took a lot of their stores and converted them from, let's say, I can't remember the exact number. It went from like, you know, maybe 100 machines, and then they increased all the way to 300. That's like 80 machines and increasing it to 200. I can quickly take a look actually. So let's see. I'll just take Giga. Yeah, converted to an average of 320 games. So when it's before the conversion is around 80, and then after the conversion is 320. Because the trend in Japan at the time was that crane games were getting more and more popular. Basically, like gambling for young adults, pretty much. With less of the traditional gambling type of, social stigma behind it, right? But it's basically a fun way to acquire products that you normally would just acquire outright, right? Adds a element of like luck to it, pretty much. The adjustment is due to factors such as change in partial depreciation treatment of finance leases and the reclassification of impairment losses and loss on retirement of non-current assets. See if there's any commentary in the U.S. We formulate existing store sales to increase 5.4% year on year by plan. After July, we plan that amusement prize expenses will be impacted by tariffs approximately 40%, primarily using existing inventory until June 30th. So after June 30th, this is all stuff, all the inventory that you would get later on. Considering the impact of tariffs and other factors, a price increase of approximately 4 to 5% is under consideration starting from the second quarter. However, the final decision regarding the price increase will be made after assessing the business sentiment. Potential price increase for the second quarter has not been incorporated into the current plan. So potentially, if Trump says, "Hey, we're going to lower taxes for China," then this would be highly beneficial to this company, right? So essentially, for every 10% decrease, you take a fourth of this and apply that, right? So this is roughly 0.8, a little bit less, 0.8. Yeah. Okay. So the company in under IFRS will be slightly more profitable because they're taking reclassifying interest expenses on borrowing leases and putting it post operating profit. I don't know. Yeah, so in JGAP, rent is included in cost of sales, but then rent is put under here, which is interest. Thinking through this real quick. Yeah, rent expenses under JGAP are recorded as depreciation and interest expenses on a P&L. Under IFRS, the interest portion is classified as finance income and cost. Okay, so if you want a more accurate figure, if you want to use previous figure, you can actually add this back. But the question is, if the company is debt, if round one is debt, then it's going to get bundled in between those two. If it gets separated out, that'd be good. But if it doesn't get separated out and gets bundled in, that'd be hard to differentiate. And then operating profit is essentially operating profit excluding rent expenses. Yeah, because you're depreciating the right of use assets, right? Is that? So what's their plan? So their plan is to in Japan to open open one store. Okay. And then in fiscal 2026, their plan is to open 10 stores. Primarily in the second quarter of 2025. And Q3 and Q4 is when they're going to be ramping that up. Dividends are expected to go up. So how are they going to use their cash flows, right? So, their cash and borrowings and their operating cash flow, they're going to be spending on new stores. Portion of that capex will be on existing stores and repayment of debt and interest, and then a portion on shareholders' returns. So this is probably like dividend. Midterm vision of growth in sales. So four things. So growth of the restaurant business. I'm not too hopeful yet on that. It's kind of like a lottery ticket for now. Growth through store openings. Actively open new stores, including stores of food hall. Growth of the existing stores, increasing the number of crane game machines, expansion of attractive amusement prizes, and actively implement collaborative campaigns. Growth of existing stores, actively implement collaboration campaigns. Oh, of their Japanese operations and of their US operations. The number of monthly collaboration campaigns has increased approximately tenfold from 2020 to 2025. They'll continue to expand the number of collaboration campaigns in order to drive further sales growth. Bigger crane game stadium refers to stores equipped with approximately 300 more crane game machines. So what do the collaboration campaigns look like? So essentially, round one will have. Let's see if I can find a round one website. I can go to the round one website. I think it's helpful. Yes, so this is probably an example of a campaign. So this is them teaming up with some idol group, it looks like, or some boy band, and they'll shoot ads of them playing. So one thing that round one is known for is Sportcha, which is Sport Challenge, short for that. So they'll shoot ads. And sometimes what happens is, let's say you, because round one they have like these IC cards, right? So if you were to buy a certain number of credits or tokens or whatever, you might get a free keychain, you might get some merch, right? Let's see if there's anything else here. That's a round one of Prince of Tennis and round one collaboration, right? So special collab. See what type of products you can get. They even mentioned that round one. Okay, so they're doing essentially themed food items from Prince of Tennis, which is funny because anyone who's watched Prince of Tennis knows that one guy likes to like when they run around the tennis court and the last person has to drink this really weird concoction, really ugly concoction. But yeah, I'm curious who actually shows up to eat this. I would feel like merch is better. Oh, okay, they do have merch. I don't know what this is though. So let's translate this. Google Lens real quick. Okay, so for each order of collaboration menu item, receive one original standee coaster. So a coaster for you get a coaster for your drinks. Interesting. And this is another way that they do collaborations, which is essentially like you have like these IC cards, right? Like membership cards basically. And I guess you can have yeah, original character cards and special coins for the Rhythm photo booth. The cards and coins are part of the collaboration pack. The promotion includes 5 different character card designs and is available while supplies last. The Rhythm photo booth. But this is just to encourage people to sign up to round one. Also, for the collaboration, they'll have the rooms will be themed in Prince of Tennis theme for the karaoke rooms. These look like card holders. Special keychain slash tokens. Yeah. These might be pins. Pins, keychains. Yeah, so they don't even do this just with anime. They do it with anime. They do it with idol groups. They do it with, and it's mutually beneficial, mainly because this allows the anime to get some promotional. It also, leads fans towards round one, which is their target group. But also, round one has so many stores in Japan, right? They have like 9900 stores in Japan. So anytime they do this collaboration, instantly it becomes marketing not for the anime IP as well. So it's like mutually beneficial. Yeah. They also do this in the US as well, yeah, which I find is smart, right? It helps engage the loyal fan base, which is something that I don't see Bolero or Dave and Buster's do, right? So this is another, semi-competitive mode for round one. Okay, so they have net cash now. Slightly less, but lease obligations are going down because they've been converting and spending money on the crane game machines, but now it's starting to depreciate off essentially. Okay, so good trend in income statement in Japan. So their operating profits have been increasing, and they were able to increase their prices. So what's nice is if they're able to increase prices and people are inelastic. I also suspect that some tourists go there and play their crane games and just are basically inelastic in their spending. Because they're in Japan, they want to acquire these prizes, and some of the prizes are exclusive to these crane game machines. And so yeah, we see a good uptrend in operating leverage here. In the US, I guess they're slightly impacted by the tariffs. But yeah, margins are even better than in Japan, despite them having to send things overseas. Meaning, I think partially because they have a different culture in doing their crane games in the US, meaning they won't help you. In Japan, if you like miss, don't get your prize within like I want to say a reasonable amount, which is like 6 or 7 tries, you can they assume you miss send to the attendant, and then they will place the prize in a very easy location to win, so that it's almost a sure win. Sometimes if you haven't done enough tries, they'll only put it in an easier spot, so you still need like 2 or 3 tokens to win, credits to win. But yeah, in Japan it's a different business model. But in the US, like let's say you spend 6 or 7 times still haven't gotten the prize, they're not gonna move it for you. Is what I see. Listing store sale. So based off an index coming from COVID, we can see that the existing store sales, same store sales, has been increasing, surpassing pre-COVID levels in Japan and the US. So that's good. Measures taken for existing stores. Special events with round one live. This is probably in relation to like karaoke. Let's see. Special challenge, round one challenge bowling competitions with popular professional bowlers are held online. Right, so they have bowling alleys as well. Remote practice, professional bowlers stream Steam-based lessons every Monday to Friday. Collaboration campaigns, those are good. Campaigns for elementary, high school students. Increase in number of mini crane game machines. So yeah, this is so not only their bread and butter are these really massive crane game machines where you can kind of like set them up in different ways, but they also have some mini ones for smaller prizes, for people who just want like a smaller prize like a keychain. New karaoke machines. Increasing prices 3% Q2. They're also increasing number of mini crane games in US. Collaboration campaigns and increasing by 4 to 5%, so even more, an even higher increase. This is interesting. This is interesting what they're going to say about this. So, in fiscal year 2026, Round One will launch stores featuring Japanese food hall in the United States. Japanese food hall brings together only the collection of restaurants listed in the restaurant guide across various food genres such as ramen, udon, takoyaki, which is widely loved in Japan. By establishing central kitchens in each region, we will be able to offer the authentic flavors of renowned restaurants that have received the highest ratings in Japan, maintaining their original quality. Furthermore, by integrating the food hall into our conventional store model, we aim to enhance customer attraction and diversify our store formats in the US. We plan to expand into 4 regions in the US: California, Texas, Florida, and New York, New Jersey area in winter 2025. As a result, we aim to open 10 to 20 stores a year in the US, including stores that do not have food halls. So I don't actually think this is possible. And I broke this down in previously. They just don't have enough collaborations with enough stores, and the amount of people they have to train to operate these stores is so high that this is not possible, right? So let's think about this, right? If you have 10 stores, right? This is what the image of the food hall is. Like a 1, 2, 3, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Ramen and ramen. Ramen and ramen. 2 ramen restaurants. 3 yakitori, takoyaki. Okay, this is a new business plan. Before, the business plan was not like this. Before their business plan was yakitori. There was no. No. So they changed up their business plan here. That's interesting. Yeah, so essentially my suspicions became true, meaning like they're not able to develop these really high caliber people to make an high-end offering. So now they're kind of going away from a high-end offering and going to a more general approach, which is ramen, curry, yaki, well, like more everyday things that you would eat in Japan that you wouldn't be able to find. Um, onigiri, udon. So this was not in the original plan from before. Before there's yakitori. Um, hmm, that's very funny. Okay, if it's like this, then it's possible they can open 10 to 20 stores because um like ramen, this is fast, curry is fast. So in 2 years or 1 to 2 years, you would be able to train someone to make probably udon, onigiri, pizza, ramen, okonomiyaki, tonkatsu. Well, tonkatsu what? Tonkatsu ramen, tonkatsu rice, takoyaki, yage, karage is chicken, ikori. Yeah, but 10 to 20 is a pipe dream at this point in time. But it's more possible with this because they're going for a different approach now. They're going for a lower quality but higher volume approach, which is what I think they should have done. This makes more sense than the high end model. A high end model is possible, but you can only open like maybe 1 or 2 stores a year, not 10 to 20. I don't think 10 to 20 is even possible, right? So I think they changed up their plan midway. Uh, hold on, what is this? Oh, this is a completely different concept. So they have the Japanese food hall, and then they are still doing the round one delicious. Oh, okay. Hello, 8. Welcome. Welcome. Welcome back. Okay, so yeah, this is what they were originally going to do, and this makes a lot more sense. Okay, so this is round delicious, which is their high-end offering. So, which is sushi, Japanese cuisine, creative cuisine, some fusion type stuff, or more modern stuff, or avant-garde, like, French garde cuisine probably. Tempura, yakitori, Chinese cuisine. So the goal project is to provide the same quality Japanese cuisine that's highly acclaimed in Japan to people overseas, so that people around the world can enjoy the taste of authentic Japanese cuisine. Um, easier said than done. I still am of the opinion that the best chefs are still going to be staying in Japan, but like sending their best representatives to the U.S. locations. And the problem is, in Japan they have a culture of really mastering stuff. So I don't think in 2 years of training someone can really master a unique genre, right? Unless they've worked in that genre for several years, right? I do know that in the application process they are looking for people with like, if I remember correctly, don't quote me on this, like number of years of experience, ideally like 5 years of experience. So you're not coming fresh. You're like you have like 5 years of experience under your belt before going to these restaurants to train for 2 years. So start opening plans. I target to open 150 stores. That's bullshit. 30 units in 10 cities over the next 5 years. That that is not possible. I don't think that's possible at all. Yeah, chosen round one instead of fast food in Japan. Yeah, during the dip in April, like fast food in Japan was a defensive stock, so it was a stable portfolio holder. Um, but then it didn't have that as much upside potential because it barely dipped. But round one dipped like almost 50%. So like 40 something percent. So the upside was much higher for that stock. So yeah. Um, but yeah, stay tuned, and I will, in the future, when if there's another stock market crash in Japan, I will let you guys know what to buy. Yeah, I don't think they can open 30 units unless they mean each of these are unit. 48 stores in one space as one unit. 4 to 8 stores in one space as one unit. So 30 units would be. See, that's why I'm thinking this is not possible, because if one unit is, let's say on average 6 stores, right? And you open 30 units, you need 180 stores, right? And think about how much manpower you need for each store, right? Because people aren't working 7 days a week, right? You need people to change shifts, right? So if you need 3 employees, 3 employees per location. You need to output 90 employees. Right? Of course, they're collaborating with many different tempura restaurants, many different yakitori restaurants, many sushi restaurants. But are you able to collaborate with enough restaurants to output that many employees? Right? And that, keep in mind churn. Right? They go to a foreign country. You know, they yes, they've learned English, but like, how good are they getting English? They might get homesick. It might churn really hard. Right? And if they churn, then you won't be able to, instead of trading people up to open new stores or trading people up to replace churn, right? That's not something they're not accounting for in these numbers. So that's why I'm saying this makes sense. As a first step towards global expansion, we aim to open stores in major US cities, New York, Los Angeles. I think they should definitely start with the highest paying power, buying power, purchasing power in consumers, which is those countries, definitely New York. Future, we plan to expand our business to Europe and around the world. Start training chefs for opening stores, sign lease agreements, open first and second units, Los Angeles and Las Vegas. That makes sense. Opening of third unit, which is in New York. Q1 2027, open fourth unit in. Yeah, I want them to open slowly and get a feel. Okay. Great time in America to bring in foreign workers. Well, especially chefs, right? Chefs are, Japanese chefs are kind of like, the training that you get in Japan is the authentic training, right? And so you would get more authentic, cuisine, which is not a bad thing. Business plan per store, 700K USD per store. Number of seats, approximately 14. Operation 360 days a year. Yeah, especially if they're operation for 360 days a year, you're gonna need like 3-4 employees per store, right? Each of these. So if you have 6 stores, you're gonna need, let's say 4. You need 24 employees for this entire location, right? Yeah, this is also a bullshit type of assumption. Average customer spend of $700 per customer. I don't know many people capable of spending this much, right? Like, you're literally charging Japan prices here, right? But you're not sending Japan caliber chefs to these locations, right? That's the thing, right? Ten employees per store, right? So see, that's even less likely, right? If you say 10 employees per store, you have 6. I need 60 and 30 units. 180 employees, right? Like, how's that even possible? I generally do not know how that's possible. Yeah, this is just all fluff, right? I think ideally what's probably going to happen is this is just to pump the stock up, right? Ideally what's going to happen is going to open like 1 to 3 locations in their first year of operation, right? And another 1 to 3, maybe up to 5, really learn the business model. And it's definitely not going to ramp up until like probably 2029 or 2030, right? A person. Hello, a person. I am also a person. Yeah, I'm analyzing companies in Japan right now, and Round One is a company that has physical stores in the US. But yeah, all the companies I'm going over today are mainly going to be from Japan. Yes. But in the future, I will also be doing stock reviews on U.S. stocks and Canadian stocks as well. I'm not just Japanese stocks, but that's kind of the niche I carved for myself accidentally. And so I just give my fans what they want. But I'm definitely open to doing like a stream on like yeah, Canadian and US stocks as well. Oh, this looks really good. So that one delicious project, right? So they are partnering up with some pretty high level, high end restaurants like Tokyo Ginza. So the thing to know about the Tabelog Award in 2025. Yes, you can. Yeah, so on Interactive Brokers, you can invest in Japanese stocks. Yeah, yeah. Yeah. So a couple of things I don't agree on is I don't think they're going to be. This is a lot of employees. Yeah, betting 700 USD, I think is going to be more like 2 to 400. This is complete bullcrap, right? To be charging this level amount of money, like even in Japan, people don't even spend this much, right? Like if we're gonna be real, right? This is like really really high end, and I don't think the caliber of chefs that they're sending will be able to deliver this high level of service, right? And there are people who literally immigrate from Japan to the US and open really authentic and really high level restaurants that don't even charge this price, right? So need your expertise in the US for us to invest in your country. Warren Buffett invest in your. In my country, do you mean Canada? Is that what you mean? Yes, Warren Buffett does invest in Canadian companies. Correct. If that's what I'm interpreting, if I'm interpreting what you're saying correctly. Yeah, I'm open. I'm open to review, like U.S. and Canadian stocks as well, European stocks, Hong Kong stocks, whatever. Like can or can. Fair, fair. Yeah, so they signed contracts with 17 cooperating merchants, and the thing about Tabelog Award is this is Japan's version of Michelin star reviews, but instead of having a having judges like people who are food reviewers review these from sent by Michelin guide to rank these restaurants, you have actual customers giving the ratings and rankings. And so Tabelog is a more, I would say, down to earth, more close to home type of review system where, people who receive the gold award, I believe only one in three, something like 1 in 300 stores get a gold award. So very few. There's probably like 50 or less gold awarded restaurants in all of Japan. So yeah, so you have sushi, zeru sushi. I don't know what that means. Kiku sushi. So sushi, probably. Uh, yeah, probably some omakase restaurants. Korean. I have a good grasp of Japanese public companies. Not all of them. Not all of them. Like I'm pretty focused on things that I understand. So that tends to be consumer companies. But I haven't looked at every single company, right? So if you say, hey, what's my view on Sanrio, right? Like I have to open up Sanrio and have a look, right? But yeah, I would say my domain is mainly consumer companies or any company that I feel that I can develop a circle of competence in. So I'm not entirely comfortable with like let's say pharmaceuticals or um, semiconductor companies yet. So round one isn't traded in the states directly, but I believe there's like an ADR for it, potentially. But I wouldn't do that. I would just buy the actual Japanese stock through a margin account on Interactive Brokers. I think that's well, this is not investment advice, but what I do personally. Yeah, I don't look at too many tech companies, but I could. I could. Foreign wise, the one that I have posted on my Substack is on Hire Smart Home. Yeah, so you can have a look at that. Plans for store openings. So yeah, another part of their strategies is they're opening like mini crane game stores that specialize just in crane games. So it's good that they're still following out with that strategy. Um, and they're gonna do a small crane game specialized store in China as well. Anything that's above 5,000, around the 7,000 range, is going to be their normal size stores. And then SP means sport shop, which means they have like these sports activities like go karting, tennis, basketball, etc. Yeah, highly recommend just Interactive Brokers. I'm not from the States, so I don't use Charles Schwab. Yeah. So yeah, Japan, they will continue opening new stores, tailored to each location, and it can range between compact stores to stadium stores. US will open small stores with mainly amusement machines and stores of food halls in addition to our usual stores. So they're delicious. So first one's in Cali, next one is Nevada, then New York, New York. Yeah. Places where people have purchasing power, essentially. I think the nice thing is it's still a lottery. They don't have to overcommit, right? They don't have to overcommit to opening these stores. If of proof of concept it just doesn't work in Cali, Nevada, like Las Vegas or New York, then that's probably a good indication that they have to slow down or something or really refine their offering. China, we initially planned to open compact stores focused on amusement facilities within existing shopping malls that have a strong foot traffic, and we'll then assess future expansion strategies based on their performance. Yeah, China is tough for them because of COVID. Retail really died. A lot of people don't go to malls, or the malls aren't as fully occupied as they could be. But I think the situation is improving. But instead of overcommitting to China and opening these big amusement stores, they're doing smaller ones first. Yeah. I'm just looking through if there's anything new that I that. If there's not, then I can pretty much look at the company's uh, valuations. Maybe we should do that real quick. Are you in Canada now? Because a person says, "Are you in Canada now?" Because if you stream during the day, you may get more views. I'm on the Pacific Coast, so it's not late here. I see. Yeah, I'm in Canada. So yes, I have a kind of fucked up sleep schedule right now. Um, yeah, I should stream a little bit earlier. Or not a little bit, but for sure earlier. I will do that in the future. Don't worry. Yeah. Yeah, I plan to stream on YouTube first, and then eventually I'll do some streams on Twitter. But I haven't figured out how to do that for Twitter yet. But definitely for yeah, on YouTube. And what's nice about YouTube live streaming is all the VODs or the videos that are streamed eventually get uploaded, and you can watch them, you can review them later on. So that's not the current price. Right now, the current price of round one is actually in the vicinity of, went up a lot today, 1337, closer to one of its previous, close to the all-time highs, honestly. Yeah, approaching it. So let's do take a look at the multiples real quick. Yeah, 18 times PE. So let's quickly do analysis on round one real quick. This quarter is fiscal year. Yeah, really good. Fill in this information. Share price is 1337. Yeah, multi-streaming. That's something I'm really figuring out as well. Like you can multi-stream on YouTube, Twitter, and Twitch. Yeah, at the same time. that's something I'll need to figure out. Yeah. Thanks for that suggestion. I'll definitely like keep that in mind, and it's definitely something I intend on doing. And I love the engagement. Thanks a lot, A person. So guaranteed deposits are for like the rent. So whenever they rent a place, they have to give some security deposit. So I wouldn't remove this because they're going to be renting for a long time, ideally, right? So if this goes down, it's actually bad. Short-term debt. Okay. Also, we're paying a lot for growth right now. Yeah, for dividend. Liabilities. 3230. Total liabilities. 141,301. Good margins. Can we get the Excel template? Oh man. Oh man, I could. I could. Do I wanna like kind of personal, man? Everyone's Excel templates is, um I'll think about it. I'll think about it. Is that honestly not that hard to create on your own? I think everyone should kind of go through the exercise of actually creating their own template. I just do it because I don't have to like insert these every single time I do one of these. And then yeah, sometimes I might make actually like a notice that a formula is actually misformulated. I'll redo it, which is why I'm on version 7, right? But I don't want to give you guys a wrong template and you guys use it and be like, oh, this is wrong or whatever, right? Like, and yeah. So it's like a use at your own risk type of thing. If I do share it, and you might not like my formatting. You might not like yeah. But this is like I use it as like a rough sketch, really. But I think the most helpful thing in your own learning is probably to create your own. Honestly, it's a good exercise. Okay, let's go take a look at the DNA. Daily round guests who showcase their stock picks. You can try getting to them interviewed as well. Nice. Thanks for letting me know. Yeah, I'll definitely take a look at that. Maybe you can send them a DM, be like, hey, you guys should feature continuous compounding on your, instead of me reaching out to them. I think it would be an easier sell if someone else, one of my viewers recommends me to someone else as interviewer, right? Yeah. Currently, I don't have something that's super high conviction, because prices have rallied. But if I find something, I'd be happy to go on and share something. Um, Nice. We have like 7 concurrent viewers right now, so this is the highest in the stream that has been. Before it was 6. So welcome, whoever has newly joined us. Thank you for tuning in. Appreciate you. And if you haven't subscribed yet, please subscribe to the YouTube. And if you subscribe right now because I'm streaming, you will get to replace Gary Mignon from the recent subscriber. So you should hit that just to get an animation. Let's see. What is our forecast for depreciation? These should have something. Do they have any depreciation expectation? Decrease in amusement depreciation by pre-recorded spaces. Nice. Okay, I'm not gonna do this on my Twitter, but I will definitely search them up right now. So they're called Wolf. What you said? Wolf underscore trading X, the hub. That is a whole mouthful. Wolf trading. Is there Wolf trading underscore? So do they have like 13,000 followers? I see a Wolf Trading underscore. Is that who you're referring to? They have like 13,000 subscribers. Okay. Yeah, I'll take a look at them at a later time. But thanks for letting me know. So let's see. Decrease in amusement expense by 1 billion. What muddles this up a little is because they do own their own stores. They don't really franchise. So when they open new stores, it's like a huge capex, and so that results in, even though like depreciation decreases from the 3-year depreciation from the crane gate machines, it also increases due to these new store openings. Hey Aiden, yeah, so I wouldn't say that I'm active per se. I would say like most of the year I'm quite passive. Like I like to buy and hold, but then there'll be events that make me trade more. So for example, in April I was trading a lot more because things just got super cheap. And also before the April drop, I kind of had an outlook that was luckily right, that Japanese stocks would just tank. So I sold off a lot of my positions and bought them all back in April, which is extremely fortunate and lucky, I would say. Um, and so yeah, it depends what the market offers, right? Currently, I'm way more passive, right? But if there's indications that the market could tank, then I might be more active. Round One is one of those companies that I've made money on several times over the last year and a half. Um, am I into any positions currently? Okay. Um, so if you go to my Substack, not to link my Substack, I just released a issue number 1 with live streaming top 5 stock ideas. So over last week and a half, 2 weeks, I issued I was going over the Japanese company handbook and I was going through stock screeners and I found 5 A tier or better stocks. And you guys can look at my most recent post to see what it is. There's actually a video of me recapping those 5 exact stocks in the post, so you can click and watch the video recapping the top 5 stocks. And and I have an entire post on it, so you guys definitely can check it out. Yeah, Middle East conflict. So war. Right, so like how I look at these situations is essentially like, okay, if war is happening, let's say it gets really big and becomes impacts the stock market, right? Then you have to think, okay, how does that impact my company, right? So round 1 has arcade centers in Japan and in the US, right? Do we really think that the operations of these stores will be impacted by this war happening in the Middle East? Unlikely, right? So if the market were to dip, right? So for example, if we were to relive in the last 6 months, this company literally dropped from around 1400 down to around like the as low as 700, 800 level, right? Then you would buy it back, right? If it were to drop this much from the current level of 1334 back down to like 800, 700, then you buy it back because the fundamentals of the company has not changed. But because of political reasons, world event reasons, macro reasons, that people are just selling their shares to protect their wealth, right? Um, Thanks for your input. Do you ever lock up ownership in a stock or do you always play by ear? I know there are some people who are against actively trading, especially with large positions. By lock up ownership, I think what you mean is by just buying and holding. I think that's what you mean, right? So for me, again, I can't say I have as much wisdom as like Charlie Munger or like some really huge veteran, right? Because I've been invested in the markets since 2020, right? So 5 years of experience, let's say. Um, and so I'm still learning a lot. So take what I'm saying with a grain of salt, of course. You can. So I would say that you have to look at for certain stocks. You have to look at what is the based on the current price. What is the future expectation, right? What type of expectation does it have to live up to, right? So when I first initially pitched stock, round 1, it was in. Let me see if I can bring up a different graph because that's not very aesthetically looking. So I first pitched this stock in January 2024. Okay, it's trading around 650, right? So at that time, I had a price target. You guys can view my stock pitch of 1200, right? And so when it got to around like, it got there pretty fast. It reached all-time highs around like 900, 1000 near this level. And by this time, I had already like traded it in and out a few times, made very good profit a few times. And so I got to 1000 levels. Like, well, I expected to get to the 1200 level in 2 to 3 years, but it's done that. It's gone to like a 900, 1000 level in literally less than a year. I took profit, and that was a mistake because it went skyrocketed back to like 1300. I did re-enter around like 1000 level, I want to say, But you know, yeah, at this point, it gone to a high of like 1400. So I kind of like learned my lesson in that, hey, the market has agreed with me. Now they believe that the stock is a growth stock. This is a quality stock now. It generates cash flows. So when it dropped this much in April, right? Like I was like, okay, the former investor sentiment now is okay. We do see this as a growth company now, and not just a value company. This is growth slash value type of situation. So the investor sentiment had changed at one point, and so that I felt that they could regain that same type of a stance. But when it dropped to like just under 800, I piled in really hard, aggressively, and it went back to 1300. I would say that at the 1300, 1400 level, it's already captured a lot of the growth, in my opinion, right? So it would be right to take profit at this level, in my opinion. And of course, you just have to determine based on fundamentals, right? Like whether a stock is overvalued or not, right? I can comfortably say at this level, I'm still on like a huge portion, like probably all of my position that I gained in April, because I know that it can reach this level again, right? And how I gauge whether it will continue rising or not is I look at the market. So if I look at the Nikkei 225, right, on a 1 year basis, if we look at it, like, you know, it's resurfacing back to its former level, right? So I'll use that. So it went as high as 40k, 41k, right? Dropped down to 33. Actually, low. This is not the exactly right graph because at one point they dropped to like 31,000 in 1 day. So this is like some weekly average, monthly average type stuff. But yeah, resurface, and I think, you know, unless it drops, I don't want to go through my technical graph, but I do use some technical analysis, but not as stringent. It's not as stringent of a technical analysis as some people. Yeah, technicals are very simple for me. It's the trend line and support and resistance. I only use those three. I think other stuff like Fibonacci's and other stuff is like you're in a way you're still you doing astrology, right? But you're using different signals as astrology, right? If you think about it, right? I like to keep the technicals extremely simple. Um, trade options. I do not trade options. My background, I'd like to keep that private for now. Actually, if you guys, should I show you guys what my... Okay, if you guys want me to review my technical analysis, I can show you. Okay, so I can't, doesn't have to work. Right. Okay, so this was the Nikkei 225, and if everyone remembers in August, it tanked all the way to 31,000. I had drawn a support level over here, so when it did like, I should do the daily thing. That's way more into it. Tells you more better story, right? So on the first day of the crash, I had actually dipped below like the support level here. And what I found that if it passes through this support level, it drops all the way down to here. Like there's no strong support until all the way down to the 33,000 level. Right? So I sold some of my stocks on this first day. And then I sold a bunch on this day. And then I pretty much, when it dropped down to here, like I think it over exaggerated all the way down to here, right? So this day was a huge buying day for me, massive buying day, because it dropped through, you know, all the way to down to this support level, right? And then my thesis was, if it resurfaces from this level all the way up here, because again, if it passes this level, then the next resistance is all the way up here. Meaning, if it goes through here with good volume or momentum, it's not gonna just stop here. It's gonna have to go up above this one, right? And so, like, I timed it almost perfectly for the August crash, and then we saw the same thing happen in April. with the U.S. tariff situation, Liberation Day, where it also dropped here. I drew a trend line. It dropped through this, this trend line. But yeah, the same thing over here. Same thesis is after it drops below this support level, the only support is all the way down here, right? And then, of course, people got faked off a little bit here, but then the Liberation Day basically put the writing in ink. So yeah, again, it dropped all the way down. Also, it repeated the same exact thing. It dropped around to the 30,000 level, right? And so on this day, it was a clear buy for me. I even have, you can look at my Twitter, I literally have a post where I was literally on a date that day during dinner, and I literally had to halt my date and be like, yo, I need to buy stocks today. And so yeah, that's what I did. And then the same repeat of the same playbook. Once it goes above this level, the next resistance is all the way up here. So you're like very likely just to get gains, right? So you aggressively buy essentially. For round one corp, for example, how do you determine which price to reach? Right. So okay. So essentially, what the day I re-entered was essentially the retackling the support level in the August crash. So on the day that I reached levels of the August crash, that's when I went heavy in, like super heavy, like aggressively heavy. Like all the shares that I sold, in anticipation of a drop, I basically bought everything back. Most of it, I would say like 50. I can't remember the exact amount, but probably like 50 to 2/3 of the capital. And then the next day, I was on a buying spree essentially. Again, I'm not saying I'm good or anything. I'm just saying that I got very lucky, and these are the variables I looked at, right? So you basically look at the market and be like, hey, we're at a bottom now, and then you look at your stock and be like, okay, April 7th, like I know for certain this stock is not valued correctly at 760 because tariffs, yes, that has an impact on their prices, but they have still like half their earnings or more from Japan, right? So, and they're diversified and they're growing store count in the US. So like, this has major upside. So this was a ticker where I bought essentially all my round one stock, right? And you can probably imagine how my return is looking like. Again, it's a lot of luck. A person, the anticipation, I can't say is like skill. It's more luck based, right? So I'll just leave it at that. Can I do it again? I don't. I've been lucky twice, is what I'll say. I like to. Yeah, in these type of situations, I don't think you have to be very lucky to be right, and I was lucky. That's what I'll say. Oh yeah, hope that helped. And you look at the Nikkei, and you also look at the topics. You look at both of them. Yeah, I had the exact breakdown on my Twitter as well, but maybe you're a new follower of mine, so you didn't see it. I guess a lot of people didn't see it. A lot of people, I didn't have as much followers as before, but yeah. Okay, back to analyzing round one. So trying to get a gauge on the depreciation. They definitely won't be spending as much on capex, and the depreciation is going to drop probably by, I think, at least $1 billion each year. So maybe 2018, 19, if we were to guess. So we can do something like, well, we already know what it is, right? So 2024. 19823. 21062. And we'll look at the forecast later in a bit. CapEx. So this isn't the only CapEx. You also have to look at like, the new finance leases that they sign up, right? Because they're going to be financing a lot of their, yeah. Not exactly intuitive, but we can put them in. So I mean, you should have a target range, I would say, not a target price, target range, right? Again, the adage of it's better to be roughly right than accurately wrong, right? So for me, it's like, oh, what's a price that round one would trade at where it's clearly undervalued, right? And you know, if it dropped to 600, that's clearly undervalued, right? If it drops below 800, that's clearly undervalued, right? Below 900 is still undervalued, but below 800 is even clearly more undervalued, right? So I think about things like that, and then like you think about, I don't put stop losses. I don't put stop losses personally, um, because I just buy and hold, right? If you're offering it to me at 800, or less than 800, like 750 or whatever, and trade it on that day, like I'm very happy to be in that stock, right? So this is where the fundamental comes in, right? Like you don't just depend on the technicals, right? If you do that, then you don't know where the price should be, right? Like you have to determine by yourself what you think fair value for the stock is, right? Um, and where it's clearly cheap, or else you're just looking at voodoo, right? Yeah, so new lease contract amount. So this is what you would kind of put in there. So tangible. Okay, for simplicity's sake, I will do minus 10.2. Here 8.6. So 6, and then we know here we're doing 9.6. And then we also look at what their future capex might be. Not necessarily discount cash flow. I'm just looking at the cash flow right now. Too lazy to pull up a model and actually do DCF. I don't think you need to actually. Yeah. If I have low starting capital, is it better to trade low cap stocks that could give higher returns and multiples? Good question, Aiden. Do you mind giving me a range of what the starting capital is? What exactly you mean by low? Is this less than 10,000 or less than 20,000 or less than 50,000? Okay. Okay. So 38K is a good amount. It's yeah, don't it doesn't matter, it's just you don't everyone starts somewhere, right? It's about making good decisions. It's not about, how much capital that, but of course, if you had less than 10K, your maneuverability is quite limited because let's say, for example, in Japan, you have to buy 100 shares minimum. So there's no like fractional ownership yet of certain stocks. So you have to buy like 1,276, which in USD terms, this is like $800 for one position, correct? But I know some discount brokerages where you have zero trading fees, right? And you can literally buy one share, correct? So I would say, it depends what your goals are, right? Is your goal to be like a good value investor? You know, because I think everything is in a toolbox, right? Everything should be in your toolbox, and like you should, low cap stocks should give you the best opportunities, right? But I think you need to not just be limited by that, right? I see a lot of people say that, oh, I have to buy, like small cap stocks. I only look at a limited universe of shares that are below, like, I want to say, what, 200 million market cap, right? I would say start off with companies that give you joy, right? Where the research process is enjoyable to you, right? So like round one was a company that I really enjoyed researching because not only was it visually undervalued, but there's a growth component, which I really liked. And in my childhood, I played arcade games. So just researching stuff about this stock was very enjoyable and that I could relate my own personal experience into the stock. And so it doesn't have to be low cap stocks, right? Like this is what? This is a 334 billion market cap. So this is like 3 billion CAD or around like 2 billion USD, right? And so, you know, I would say if you're just starting out and you start researching, research stocks that you have, like the Peter Lynch method, research stocks that you know or enjoy. Right? It doesn't have to be, because the lessons that you extract will be applicable to any type of cap stock. Right? It doesn't matter if it's small cap, medium cap, large cap. You know, the skill set can be applied in all cap. It's just that the hunting ground, right? Where are the best opportunities? Likely in low cap stocks, likely, right? But then another component another theory-based component you have to understand is the time in which price gets realized. Like, what I mean by that. Okay, so let's say you have a stock that is trading 50 cents on the dollar. Okay, so it has an 100% upside, right? But because it's so underfollowed or shareholders have been burned, that you need a new cohort of capital to come in to kind of realize that value, right? That might take longer for this stock, right? It might take 3 years, 4 years, 5 years, right? Like, let me give you an example. Let's say it takes it takes 3 years, right? Let's do the simplest example. Simplest example, 100% return is 7 years, right? So your compounded return is 10%, right? But what if I found a stock that's large cap US, right? And it's trading for 90 cents on the dollar, right? And we know that capital is going to get allocated quickly. We know that there's a lot of people covering it. And we know that, you know, if you're right on the thesis that it goes from 90 cents to a dollar, which is like roughly 11% return, right? In a month, right? So which is the better opportunity, right? Of course, you have to do a lot more work to identify like the amount of work it takes to, you know, identify the 90-cent opportunity, right? And to have that conviction is probably the same time, you know, so like you're doing, you know, it's going to be hard to find 10 opportunities that return 11%, right? But I hope that you understand that example, right? So the thing about US large cap stocks or the US market is, yes, they're less undervalued, but then the time it takes for their value to be reflected and price to be realized is much faster. And I think that's what a lot of value investors don't keep in mind is time to price realization is a very key component. Yeah. Yeah, so to answer your question, like your 30K, you know, you have very good flexibility in these stocks that you can pick from and choose from. I say if you're just starting out, analyze companies that you enjoy, right? Also, you can also analyze companies because you do want to be expanding your circle of competence over time. So you want to look at stocks also where you can attain some level of circle of competence, meaning it's not too outside of your comfort zone, but one where if you were going down the rabbit hole and actually studying the business, you'll be able to understand. So like a furniture store, let's say you've never looked at a furniture company before. That's something you could learn, right? Anyone can learn a furniture company, right? Yeah. Yeah, what helps me look at Japanese stocks is because like I just love Japanese culture, right? So it's just researching Japanese stocks is just extremely enjoyable, right? So I like to, and you also think of in the terms of competitive edge, right? Obviously, companies that you've experienced yourself or have enjoyed, it's easier for you to like analyze, right? If you like Nike shoes, if you like Jordans, if you like sneakers, you like streetwear, you like rap culture, you're gonna have some in-depth knowledge that someone on Wall Street who isn't like that, you know, you have an edge on them, right? In being able to get at the pulse of a company way better and more accurately and generate conviction that they just don't have, right? So, look at what companies have you looked at. No, sorry, what companies have you experienced as a consumer or have used, yada yada yada, and yeah. But don't just be one of those people that just, I'm not nothing against them. There's systematic ways to invest in micro cap stocks and small cap stocks where you're likely to generate like a 15% plus return just by systematically buying really cheap net stocks, right? But for me, I not only want to do that, but I want to actually get better at investing. And so systematic approach, yes, it probably works, but I want to expand my circle of competence. I want to get better at actually analyzing companies and developing my skill set and understanding of companies, right? So really understanding business economics is very important to me. I should, Leonard. That's a good question. I should. I should. I actually wanted to invest in PayPal, um, but then Interactive Brokers does not have that ticker. So after I did the analysis, I wasn't able to invest in PayPal, which is like a kind of annoying to me. Actually, what is that company even worth now? Let me just take a quick look. Hopefully not too much. I'd feel kind of like butthurt if that company went up by a ton. I wrote about it, did a brief entry on it a while back. TPK. A. Yes. Okay. King World 1110. Let's see. What is 1110? What is it trading at right now? Oh, did it drop? Oh no, it went up a lot. Yeah, so when I looked at it, it was like 40 cents. And now it went up like 50%, but I couldn't buy it, which is really crap, really freaking annoying. But yeah, whatever. Yeah, I would have made almost 50% on the stock because literally I was buying it. I wanted to buy it around this range. Yeah. No, my mother tongue is actually Cantonese. And Hong Kong stocks they they report in English, so it should be a country I looked at. I just have been kind of lazy in looking at it, but definitely I can look at Chinese stocks. I can look at Hong Kong stocks. Look at Euro stocks. I just haven't. I'm kind of just focused on Japanese stocks. But I'm happy to, if you have any, recommendations in the future and suggestions of what you want to look at in terms of Hong Kong, Europe, feel free to send them my way, and I'll use my framework of analyzing stocks and apply it to that stock. I'm not allowed to buy it for some reason. Yeah, they just don't allow me to buy it. Like, let me take a look right now if they allow me to buy it. I can double check. But before I was not allowed. So okay, I'm gonna quickly wrap up on round one because my buddy is literally asking me to go to the gym. So I'm gonna quickly wrap up on round one and put my own feeler into where I think the company is gonna be. Capex, I don't think. So let's take a look. 30. Okay, so probably less depreciation. I'm gonna guess. Right. Let me take a look at 1110 because I told you I would do that. So 1110. King World. Yes, I'm still not allowed to trade it. Yeah, I don't know why. It said something about liquidity or like penny stocks in Hong Kong that I can't buy. I think the notification I got before was somewhere around those lines. It's annoying, but like 28817. Accurate 21, 24. Capex 29. I don't know how accurate these look. Okay, I'll just use it for now. But 9759 37507 here is 25793. Oh. Yeah, and then 28817. Yeah, I would say currently round one's pretty fairly valued. Yeah, like if we want to test it, right? Like, okay, let's say 750, right? I think that's where it dropped to at one point in time. Yeah, look at this. Like, look how cheap that looks, right? Like, this is obviously cheap, you know, if it drops to this level, right? And yeah, and because it can resurface to 1300, because at one point it did increase to like 1400, right? At one point, people were paying these multiples, right? So if people were willing to pay these multiples at one point in time, and literally the stock drops to like 750, they saw 780, right, or whatever. Clear buy, right? And they can expand to Canada, they can expand to US, they can expand in Europe. Huge growth trajectory potential. And their competitive edge is a very unique offering that Bolero and Dave & Buster's do not have in the United States. So, elevator pitch for this company is just very simple, essentially. Yeah. So yeah, current prices, I would say like pretty fairly valued, if not like most of the growth trajectory is being already factored into the price, which is like I would not buy at these levels. Yeah. Give me one sec. Okay, so you know, thanks very much for everyone's engagement. We got to 7 concurrent viewers today, so very good turnout. I'm really happy that you guys were able to join me. Got a little bit sidetracked, but with good reason. Got sidetracked with some really good questions on, you know, my process, my thought process, theories that I apply. Again, take it with a grain of salt. You know, I'm not like I don't want to paint myself as a guru. I'm just like person that's highly passionate about investing, and that's a label I put on myself. Don't see me as, I mean, if you choose to see me as a guru, sure, but like that's not the label I want. The label is someone who's just passionate about investing, who wants to improve at investing every single day, and just get better as an investor. You know, that's what I want to do. So yeah, and then I hope, you know, my journey as an investor is recorded, and you guys follow me in this process, and you know, see me grow and be invested in my growth story and my journey. It would be, you know, really nice if you guys can, you know, come along on that journey and you know, support me along the way. So if you guys haven't, please like and subscribe and comment below. And you know, if you haven't looked at my Substack, look at my Substack for more investment ideas. And yeah, I'll be doing a lot more of these. Maybe after my gym workout, I might fire up another live stream, but if not today, definitely tomorrow. I'll be doing a lot more of these live streams in the future. So yeah, look forward to that for sure. So just gonna give shout outs. Thanks Leonard for joining in, Aiden, a person. Who else is here? Yeah, 8. Sojin. Okay, I'm trying to translate it. It's not allowing me to translate your. Remember, it's Sojin something. Sojin Ha. Thank you. I think it's like probably the first Korean name that showed up on my chat. So yeah, thanks all of you guys for joining in and tuning in today. There's probably more of you because there was a once 7 concurrent viewers. So thanks a lot for tuning in, and I'll, you know, continue the live stream at a later date. Peace out. Thank you.